This is the Dave Ramsey Show. We're glad you're with us, America. Thank you for joining us. Heading into the break, I was talking with Sharon in Sarasota, Florida, and 68 years old. 20 years ago, they bought a universal life policy, which is a type of cash value policy. A portion of your premium, folks, when you have a universal policy, goes to pay the insurance cost. And the insurance cost goes up every single year because it's based on annual renewable term rates. And so more and more is going to insurance cost as the policy gets older. Less and less is going to the investment, to the point that they crossed the line a few years ago and contacted Sharon and her husband and said, oh, now the premium that you're paying, 100% of it won't cover the insurance cost. So now if you want to keep the insurance, not only is zero going to investments, but now even more has to be paid to keep the insurance active. And that's how far we got in the discussion. Is what I just said all correct, Sharon?
Yes.
Okay, and what is the face amount of this policy?
$80,000.
$80,000. And how much money do you all have?
How much money do we have?
Mm-hmm. Yeah, how much are in your 401ks and your nest eggs?
We do have retirement accounts.
Mm-hmm. How much?
They total $84,000.
Mm-hmm.
We have a $10,000 emergency fund. We are debt free. Our house is paid for.
Good.
So this is kind of like.
So you don't have how much cash value is in this?
Right now it's at $6,000.
Okay.
So
and do you have pension plans as well?
No.
Okay. And so you're living on Social Security and $80,000 worth of 401k
actually,
money.
my husband still works. He has $36,000 in income, and he brings in $21,000 in Social Security.
Okay. And
that's all. I don't work.
Gotcha. And the face amount of this policy you said was $80,000.
Yes.
Okay.
So we did look into term insurance for him, but number one, it's really a lot more expensive at his age. But number two, he has battled cancer a couple times.
Yeah.
Non-Hodgkin's lymphoma, and so basically nobody will touch it.
Yeah, very difficult. Very difficult.
So we don't know. We can lower the death benefit.
So what is the premium? How much is it a year?
It's $77.
How much?
$77.
A month?
Yeah.
Okay. All right, so $800 a year, and you make $36,000 a year. Well, here's the equation. Here's the way it works in your mind. Okay. The purpose of this is to give you an extra $80,000 if he dies before you do. Okay. And so, is that worth $800 at this stage? There's no investment value whatsoever. So we're not gonna. The only question is, you don't have a huge nest egg.
Right.
You've got a small nest egg, and so to double it, basically, if he were to die, would be very helpful. And so, keeping the insurance sounds really good with that in mind.
Yeah, they told us it would only last another 3 or 4 years.
Anyway.
It'll be 71 or 72.
Okay, and they're going to make you stop anyway. They're going to pull the plug on it.
Yeah. Oh, yeah.
Okay, and at that point, you would cash it out, and whatever cash value is in there.
There wouldn't be any in there.
Yeah.
My husband would like to get it out now.
Yeah. The only way to get it out now is to close the policy down.
Right.
Which
I
means
want to do that.
which means that you would, if he passes away, you'd have the 401k money, the paid-for house, and be living on Social Security, right?
Yeah.
But you probably can make it, because I got a feeling you guys are frugal people.
Oh, yes.
And so you probably could make it on that, but it's not going to be a dream come true. So they have given you notice that at 62 or I'm sorry, 73 or whatever, 70 years old, they're going to shut the policy down regardless.
Yeah. Well, no, I guess if we could keep paying, at that point it would be over $200 a month. I think we could keep it going, but.
Oh, okay. All right.
Or we could lower the death benefit and keep it going. They told us we could do that, which is what I wanted to do, but he wants to cash it out, so. Okay. So we're doing nothing.
Yeah, there's not a great answer. Okay, that's why I'm hemming and hawing a little bit. I'm trying to think through it. My tendency is at $800 a year right now to keep it for a while. Okay, $77 a month. Even if you use the cash values, you can have the cash values begin to pay the premium. and it's going to use up some of that $8,000. I'm probably going to do that and let the $8,000 pay the premiums starting today, and I'm probably going to leave it in place a couple of years. When it starts being $200 a month instead of $77 a month, at that point, I'm probably going to join his tribe and say, let's cash it out and close it down. But I don't think it's going to make sense to keep this for a long, long time. We're probably going to keep it a couple more years. How's his health?
What's that?
How is his health?
Well, he's the first time he went through, he stayed cancer-free for 5 years, and this time he's been cancer-free for 2 years.
Good.
So, I mean, he goes in and gets PET scans every 6 months or so to make sure it's not coming back, so they can stay aggressive with it.
Good. Well, I'm glad to hear that.
Yeah.
Well, so, yeah, I'm gonna let the cash value pay the premiums for the next 2 years and keep it open.
Okay.
If and I'm going to check on his health at that time. Let's say that he's got another episode with cancer going at that time. Then you pay the premium no matter what it costs.
Okay.
And you keep it open if the cancer's come back at any stage, right? You keep the thing open at that point. But if he's doing really, really good and everything's clean, and 2 years from now you haven't seen a spot, no problems anywhere, I'm probably dropping it at that point.
Okay.
Does that make sense to you?
At that point, he wouldn't be insured. So.
Yeah, but you're also not paying $3,000, $2,000 a year, which is what it's going to be at that point. Yeah, right. Which is starting to be ridiculous. With that kind of money, you can throw money into investments and start having some money. Yeah. And but at this stage, I'm hesitant to cancel it. It's obviously a bad policy. It's obviously been a bad thing, but it's your only option. You're stuck with it. Yeah. So that makes it hard to discuss and hard to think about. But I'm going to hold it 2 years, let the cash value pay it. At the end of that time, if he's healthy and still cancer-free, I'm dropping it. Otherwise, I'm going to keep it if he's got a health issue at that time. So, good question. Thank you for calling in, and I'm sorry you had this problem. Folks, you hear me yell and scream about cash value life insurance, whole life life insurance, universal life, variable life is a ripoff. You just experienced it. You just experienced the back end. What happens if you buy one of those pieces of crap policy and you're 68 years old? This is what happens. Because the money they put into that stupid butt policy would be $300,000 right now in mutual funds if they'd have put it into a good investment instead of getting ripped off by this insurance company. And if she was sitting there with $300,000 plus the other 401k, they'd have about $400,000 plus their house is paid for. She wouldn't even have called me. But instead, guess who's fat and sassy instead of her? The insurance company. So when your whole life agent says, I don't really agree with Dave Ramsey, it's because your whole life agent's trying to rip you off. That's why your whole life agent's saying that. And there's only two kinds of whole life agents, ignorant and crooked. Because if you understand these numbers and that story right there, and then you still sell this stuff, that makes you crooked. You ought to be ashamed of yourself. And if you don't understand these numbers and you're still selling that stuff, that makes you ignorant. And you shouldn't be selling this stuff. And by the way, folks, in case you didn't know, you'll get screwed way more often by an enthusiastic ignoramus than you will by a con artist. So most of the people out there selling this crap are enthusiastic ignoramuses. They're not actual con artists. My Uncle Charlie sold me this. Well, he's an enthusiastic ignoramus. That's old Uncle Charlie. We just nailed him right there. Because he's probably not a crook. If he'd actually sat down and looked and realized that Sharon, if Sharon's friend sold her that, he's not a friend. With friends like that, you don't need enemies. You know, she could have had $300,000 in mutual funds, easy for what they've dumped into this crappy product. Whole life insurance, the payday lender of the middle class. Oh, it aggravates me. This is the Dave Ramsey Show. Hey guys, thanks for watching. If you enjoyed this video, click the subscribe button to get the latest content and check out these other great clips from the show.